What's up, family? Jamie here. It's me. It's September the 2nd, and I'm back. Today is a holiday, so I took the day off per ICT's recommendation because holidays tend to be low volume. But I did see the 2022 YouTube model, so I'm going to point that out. And I'm also going to answer a question. Somebody sent me a message on one of my videos, and they said, how do you know what to look for and where to look for it? I don't know how many times I've overlooked one thing or another, and it results in me getting stopped out. I've been watching ICT for like 6 months now. All right. Well, welcome to the world of ICT. We're glad to have you. I'm the president of his fan club. JK. But no, really, I am. I should say family club because we're more like a family, and he's our patriarch. So I know there's a lot on this chart right here, but this is just how I have it marked up. And I would like to say for the month of September, I'm going to humble myself and I'm going to focus on trading micros. People who know me know that I always thumb my nose at micros, but in an effort to master me and my trading psychology and my uh, desire to focus on executions more so than money, I'm going to really try to limit myself to micros so that I can focus on executions and not so much about, oh, I'm gonna make $1,000 today, or I'm gonna make $500 today. And so it's really just a part of me and, as I said, having mastery over myself. So, and not being motivated by the dollar, okay? Because this is a marathon. You know that saying, it's a marathon, it's not a sprint. So these are just, the levels that I have marked up on my chart. I'm going to hide some so it's not so overwhelming. But I just wanted to point out, and this is again going to go in my journal as all my recordings do. So just looking at this, I had my draw on liquidity be previous high for today, which would be Friday's high. And that's because my draw on liquidity for Friday was this high up here. And it didn't make it on NQ, but it did on ES. So ES just needs to catch up. So that's why if I was trading today, I would have had previous day high, beat my draw on liquidity. So let me see what I could clear up over here real quick. I want my hourly levels, but I just want to show this. I want to show this, and I want to show this. And then for my daily levels, we don't need to really see any of those, so we can turn those off. Haha, that's a lie. I do need this. Okay, so let's do this and let's do that. Okay. So a lot of times, what I focus on is how does price react to the previous day range. So at the very least, opening up here, I want to see, does price come down to at least equilibrium of the previous day's range? And we almost made it there. And what prevented us from getting there is this hourly inversion fair value gap. So the person that sent the message and said, how do you know what to look for and where to look for it? If you're trading during London, then you would be looking for London, prices, you see it's dropping. Well, you want to see it react to a high time frame PD array. So this would be a high time frame PD array where you can be like, okay, let me start to look to see if price is going to react at this high time frame PD array. Ideally, we would have hit 50% of previous days range, but like ICT says, that's close enough for government work. So it did come here and it reacted out of there. So you can go into this wick right here and see, do you see your model, whatever your model is? And I think I looked in here and I saw the 2022 model, But for me, in the times that I trade, it would be between 7 and 11 Eastern Standard Time. Oh, look there, the market's open. Hey, friend. So right there. So, oh, what I do need is my previous day high. Previous day high, because that's my draw on liquidity, right? So then I'm like, okay, where do I go? Let me go in here and see, do I see my setup? And what I'm noticing here is these are key times, midnight and 6 p.m. And if you're bullish, you want to ideally be able to go long below those key times. So I'm just going to drop down to 1 minute because I know that the model is there. And I will show you that. I'm going to turn off my previous day's range so we can get rid of that. And then here we are. So when you're looking at, I would be right here, right? So the model is you want to look for a stop rate. Well, first of all, you want to look for a reaction to a high time frame PD array. So this green box right here is an hourly fair value gap, right? So we see it's kind of here, kind of dug in here, maybe went to about 25%, left up out of it, then came back. So for me, this is a reaction to a high time frame PD array. And note that we're below 6 p.m. and 12 a.m. And so what you want to do for this model, now you have to identify what model you're trading. And I'm a huge advocate for having a model. So you just always know what to look for and you're always on rinse and repeat. Then you want to look for a short-term high to be displaced. So I'm using this one right here. And again, this is hindsight. I did not trade today. This is like the forward testing I did in August. So then you want to see like a displacement above this short-term high. So this is one I'm using. And then you have a fair value gap. So there's your fair value gap. I'm going to hide my hourly fair value gap now. That could stay, this one. Okay. So it doesn't get too weird. So let's make sure I got this marked right. We need this right here, and we need this right here. So there is my 1 minute fair value gap. So that's what you want to see for this particular model. You want to see price come into the fair value gap. Sometimes it'll go to 50% like it did here. Sometimes it won't. Sometimes I need to make this darker. I want this darker. There we go. Okay. Sometimes it comes to 50%, sometimes it won't. You just have to be the gauge of that. So, let's just say I put it here. You put your entry at the top of the fair value gap, and you can put it at the bottom of the wick, the candle that creates the fair value gap, or ideally you put it down here, because since we ran these stops down here and even over here, since we ran them, the goal is it's already stopped people at their long, so it doesn't have a reason to come back down there. So then you have your take profit at, well, I have my take profit at previous day high because that is my draw on liquidity. And as we see, and I want to make some money, so I'm gonna change this to I'm being motivated by money. change it to 2 contracts. And then there you go. You just it's just as simple as that. And notice the power of these times, how price dropped down, it hit my target, so I'm out, I'm done for the day. But notice how it just whipped right back down here, pretty much to the same fair value gap. And then took off, and then, just went up a little higher than that. And then, just trailed off there. So that is that's that. That's my model. It shows up every day. It's just a matter of knowing, for me, what the draw on liquidity is, and gauging, like when you have big fair value gaps, sometimes you do want to put it at 50%. But if it's in your risk tolerance, it's just best for me to put it at the edge here and put your stop down here. That's it. So I hope that helps. And while we're here, I do want to say, you're 6 months in with ICT, like give yourself a year, take your time. Don't try to be using this as some kind of get rich and, it's going to happen quick for you, because it's not. And you don't want to put that kind of pressure on yourself. I've been studying ICT for over 2 years now. I'm by no means am I an expert, but I believe in what he teaches. I'm an advocate for people to learn what he teaches. And that's just what it is in my trading career right now. So I do want to point out, how he says in the PD array matrix, that this is good. The PD array matrix says that when you're bullish, an old low or an old high is a PD array. And this is a perfect example of an old high, aka previous day high, during the Monday session became support. It was a PD array when price came down here. So price, not only did it bounce off of the previous day high, but it came into this fair value gap, which is also coupled with this order block right here. So it makes it a high probability order block. Isn't that beautiful? So that's it. I don't think I want to say anything else. I think, even though this is a holiday, and, he recommends we take off during the holiday, it did exactly what I would want to see it do if it was a regular trading day during the week, so that's what's pretty amazing. So I could have gotten up, did my routine today, and just been just fine. So I think that's it. Hopefully, it's Maxi one that helped you. And if you have any more questions, just let me know. And I'll do what I can to help you out. Okay? Everybody be cool, and no matter what, always stay in trading school. Bye.